profits come in better than expected over the long term, then the market goes higher.
No. I wish it were that simple.
No, it is that simple over the long term.
In 2022, that didn't help you at all. The NASDAQ fell 35%.
What I'm saying, into year end, into next year, if I think profits are going higher, I think ultimately the market goes higher. That was my point.
If you have a recession and profits go down, then you better be bearish.
Fear is mounting. The VIX is capturing that. Investors are afraid to be in front of the freight train of higher rates.
That's right. Fear, fear, fear. Rates, rates, rates. Everybody's worried about rates. Let's jump into it. Welcome back. So what do we got? What do we got going on here? Rates are surging. We know that. We're going to take a look at rate surging. Something is going to break here. Okay. Something is going to break eventually. I can smell it. I can sniff it. It is coming. We're starting to get revisions lower. This is GDP forecast from the Bureau of Economic Analysis. They actually revised down growth. They're saying for the past 3 years, growth actually isn't as strong as it was reported. Okay, so what does that tell you? And they highlight consumer spending here, right? Consumer spending. Has the government been lying about growth, right? Probably. Who knows? Okay, next slide. These are the rates we're looking at, right? This is the 10-year benchmark rate. And what's really going on here is we're at a 16-year high. We're at levels from 2007. Okay, surging. Who does this threaten? Regional banks. They are cracking. I think I heard a bank cracked earlier this week. They are cracking. Their collateral is down. Commercial real estate rates are too high. They're collapsing. They cannot refi. They're defaulting. Consumers dependent, right? Consumer spending is going to decelerate, right? Credit cards. We got Citibank. We got some Citibank data that showed that credit card usage was falling. September was the worst month, right? But anything that's dependent on consumers, retail, Nike, Foot Locker, Target, who else was it? A couple other retailers not doing so well, right? They also have to refi a lot more. They borrow more quickly. Small caps, interest rate sensitive companies in general are being crushed at this rate. Now so this is the stock market, right? This is the US economy. Consumers are falling off the cliff. They're 70% of growth. And now you have small caps falling off a cliff. We're going to look at the ISM manufacturing index. We'll get into that. We're also going to look at Tesla breaking out today. There's other companies who are going to do well in this environment over the next 3 months, right? Okay, next, global debt, right? When we look at the US dollar, so not only rates are rising, the macro forces, rates are rising, 10-year, 30-year, surging, hurting everything we just talked about, but you got the dollar stair-stepping higher. What does this do? 80% of global debt is denominated in US dollars. Okay, remember that 80% of global debt denominating. What does that tell you? What does that mean? That means all this debt is actually getting more expensive, right? It is hurting foreign holders of debt when it comes to dollars, right? Debt burdens are rising, defaults starting to pick up, right? The dollar strength cripples foreign liquidity flows. Period. It cripples foreign liquidity flows. Now I want you to focus on this. I want you to take a look at this really quick. All right. Oh no, that's not what we're looking at. Right here. Okay. So I think that is it. So foreign liquidity. Now this is kind of something we're going to dive into a little bit. Actually, let me take this off so we could talk about this, right? So if something does break, right? I think something's going to break here. Not only are 10-year, not even 10-year, not only are rates surging, okay, really causing credit card crisis, right? This collapse, the retailers, small caps, right? Refis, commercial real estate. Not only is that surging, but the dollar also defaults foreigners when it comes to their debt, meaning they're gonna have to borrow more dollars at some point. Their economies are at risk as the dollar goes higher, right? So something I think is gonna break. If something does break, there's a good chance the Fed steps in like they did in March of 2022, okay, like they did in October of 2023, which is something I just picked up on. Okay, I just picked up on this and we're gonna share this. So if something breaks, the Fed's gonna step in, right? The US Treasury will step in at some point. And let's take a look at this, right? Let's take a look at what we're speaking of here. So first off, right, back in October of 2022, take a look at this. Back in October of 2022, this is where the US dollar peaked. The US dollar stopped going up. Why? Because central bank liquidity swaps exploded. What is this? Liquidity swaps are spike when borrowers need USD, not borrowers in the US. These are foreign central banks. When foreign central banks need liquidity, they come to the US, right? They come to the US central bank. We offer these swaps, these liquidity swaps. We inject their economy with dollars. What does that do? More USD created weakens the US dollar. Okay, weakens it. You're creating more supply, you're debasing the currency, you're weakening the US dollar. Dollar weakness equals market bottom. This is also when the market actually bottomed. Take a look at this. This is the actual chart if you like to look at charts, all right? Dollar liquidity swap spiked. Here's the event. Dollar peaks, the S&P bottoms out, right? October of 2022. So when we actually bottomed, very interesting, when we actually bottomed in October of 2022, everybody's like, why did we bottom? Yes, inflation made some progress, but we also had foreign central banks collapsing, right? The dollar was so strong, it was destroying their monetary base. They were at risk of default. So we offer them borrow. We don't give them for free. We give them dollars. They have to pay back that in interest. And that's what's going on now. So the S&P bottomed the last time this happened, right? Next chart. There should be another chart on here. These are the only charts. Well, anyways, the concept is, hey, foreign liquidity swaps are coming in. Yeah, this is the next one. Okay, so 2023. What happened when? So that was when something broke in the foreign markets, right? Something broke outside the U.S. The dollar broke other economies. The dollar causes havoc when it goes up on other economies. Their debts rise. Now here in the U.S., rates rise. Something breaks. We got that in March, right? We got that in March of 2023. Here's the dollar. It started to decelerate. Why? Because Fed net liquidity or Fed liquidity stepped up on the Fed's balance sheet. Why? Because regional banks broke. The Fed stepped in. Dollar peaks. S&P 500 bottoms. That's literally what happened. Something broke in the regional banks. Fed liquidity stepped up the Fed's balance sheet. Quantitative tightening turned into quantitative easing for a second there. The S&P bottoms because you got more liquidity and the dollar peaked, right? Relieving that pressure. So that is the setup I think we're going to see. Something's going to break, right? Is it going to be, 2008 financial crisis? I don't think so. I think as soon as something breaks, regional banks, commercials, retailer, whatever it is, the Fed's going to step in, the dollar is going to ease. And I think we're actually closer than that than others may actually think. I think we're actually closer than that. And we're going to go over the data that we got today. But first, okay, what is the market pricing in, right? Now let's take a step back. What is the macroeconomic data we're looking at right now? Okay, the data is coming in softer. The revisions for growth are coming in softer. Jobs are coming in softer. Actually, I heard the job openings were actually lower than reported. This data has been revised lower, every other month. So what does that tell you? The economy is actually weaker than expected. We're actually closer to the end of the rate hiking cycle. The bond market is closer to capitulating. They're going to cover. They've already made a lot of money, and the S&P is pulling back, right? So, anyways, inflation data also coming in better than expected, right? We get inflation in about 9 days, okay? The market is pricing in the end of hikes. The market is further pricing in the end of hike. That's what is finish him, right? Finish him. You guys played Mortal Kombat. We're almost there. Powell is about to finish the bond market by saying, okay, we're done. Capitulation. Consumers are weak. They're defaulting. They're literally borrowing. Shout out to Josh. Actually, Josh, my mom actually told me, one of her friends, I don't know if, who cares? I don't know the name, that they are actually borrowing against their house so they can pay off credit card debt, $30,000 of credit card debt. So consumers are going to collapse. I still think we get a fourth quarter rally here because U.S. consumers will keep spending because we're the U.S., because we like to spend money on things that people do not care about so that we can look good, right? So oil is the wild card here. Oil is the wild card. OPEC likely wants the dollar to go lower. Why? Because OPEC is another country. The dollar goes up. Their debts go up in dollars. They're like, hey, you guys, cut rates, chill out here, break the economy, do something because the dollar's too strong for us, right? So I think that's what OPEC wants. I think we're near that. If oil does fall, the win is in the basket, right, for the S&P. Why? We're at if oil does fall, that's the last big risk here. If rates, I'm obviously assuming that rates reverse, that the dollar reverses. And if oil starts to reverse, which it just collapsed, biggest fall, it's all the way back down to 84 right now. Hopefully it sticks there. Who knows, right? But if it does fall, the win is in the bag for the S&P 500 for risk assets. Not all of them, the ones that can survive. The ones that, survival of the fittest, right? You go back 3,000 years, guess what? Most of your ancestors did not survive because they did not adapt, because they didn't do the work. So the ones who did the work, they're going to survive. I think they go higher. The S&P just needs to hold the 200 daily moving average, which it touched this morning. We got to, in pre-market, it touched 218. We're going to get to the technicals. It's holding the long-term trend, and it's holding the 200 moving average. Let's go, right? So what is the conclusion here? The conclusion here is, and we're going to get to why, Santa Claus rally. And I'm going to go over this on Friday. I do believe this Friday, the jobs report, the employment report, is going to capitulate fully the bond market. Maybe I'm wrong, but I'm going to put a 70%, 75% chance the bond market capitulates, rates come off, dollar comes off, oil continues to trade sideways or go lower. The market bounces, and this Santa Claus rally first leg starts. That is my prediction going forward. And let's dive. Actually, let me hit your comments, and then we'll dive in the technicals. We'll also go over, we're going to go over Tesla, right? Yassine, really? So I misunderstood. I didn't read. I did read it. You did read it. Yeah, what I said yesterday, watch, we'll go right over it when it comes to that. What up, Slime Z? Let's see. Let me get to it so that we're not confused here. Too many things. Bro, what the hell? The hell is my where's my did it fall? Did it come off? No. Oh, there it is. Okay, my bad. I thought that I was getting tricked. All right. So this is what I said, bro. Let's get into it. Let's go to the profile, right? You thought the dollar would go up. It came down. Now, here's what I said last night. I said, and we're gonna get to, we didn't even get to economic activity. So here's what I said. Where the hell is it? Okay, here we go. I said anything above, okay, here it is. Anything above 53.6 to 54 may trigger rates higher, dollar higher, S&P lower, right? That's what I said. Anything below 53 should ease financial conditions, which is pretty much the opposite. Also, my guess is new orders can rise without scaring the bond market as long as prices paid fall. Prices paid stayed right where they were. Nothing really changed, right? Anyways, point being here, I said if anything gets above 53.6, the dollar would rise. That wasn't the case. We came in exactly at 53.6. Therefore, the dollar did not rise. It actually fell. That was enough. Also, the jobs report, which my mistake, I should have put up here the ADP payrolls data, and I did not do that. That's probably what you missed. If what I would have said is if payrolls come out weaker, dollars going lower, right? If the economy right now, good news is bad news. And actually, let's go ahead and dive into that. Right now, good news is bad news, which means bad news is good news, right? So what do we get? Bad news, ADP payrolls came out weaker than expected. Expected 153K. We came in at 89,000. That's very weak, right? Now the market is showing its colors. The curtain is being pulled back, and we can see that the economy is naked, right? Something is missing, and it doesn't look good. But I don't think it's over yet. I think we're going to get into that, okay? Bad news is good news. Also, as expected is also good news. If something comes in as expected, I believe that is good news for the market. It doesn't want surprises. The stock market, right? The stock market. It doesn't matter if the news is good or bad. What it is it wants the expectation to be met. It wants to know. It doesn't want surprises. Keep that in mind. The market is okay if something is not too great, as long as it's not surprised. It will price it in, right? So that's why I said bad news is good news, and as expected is bullish. Okay, what happened? Private payrolls came in weak, yields down, dollar down, oil down. Oil didn't have really nothing to do with that. Maybe, kind of. The traders are like, all right, this move is over. SPX up because we're oversold and because there are still companies who can do well in this environment. Okay, next, ISM Services. Okay, this is the ISM. Obviously, we're just looking at that. Came in as expected. Market goes up, weakening from the prior month. This is good. This is the rolling expansion / recession, which means manufacturing is starting to pick up. The ISM manufacturing is picking up. Okay, manufacturing is leaving the recession, it's starting to recover. Services are rolling over, not to a recessionary degree, but they probably head to 50 or to contraction territory. We will see. We'll track the data going forward. But for the most part, rolling recession, this is perfect because growth can ease. The Fed will be off the brakes, but it's not completely collapsing yet. Okay. Actually, no, let's go into the parts. The parts here, okay, this is a little more nerdy here. The parts here, business activity actually increased from red to blue is what we're looking at from August to September. Is that right? Yeah. Business activity increased. New orders decreased. So the new orders, forward-looking data decreased. There's less demand for services. Employment decreased. Less employment. We should see. That's why I think we're going to get weak employment going in on Friday. Prices didn't move. That's okay. Prices did not move. We're not seeing stagflation in that segment, right? Next. Now we look at look at this is very important. Everybody misses this. This is the bullishness for the market. Economic activity is recovering in the manufacturing cycle. Okay, why? Because fiscal stimulus. Did I put that on there? I guess I didn't add it on there yet, but economic activity is cooling in services, but picking up in manufacturing. Rolling recession or rolling expansion. Is the cup half full or half empty? That's kind of the question here. We don't know, but I'm more optimistic, and I just watched price action here. Okay, I'm just going to watch price action at this point. So that's the economic data that we are getting going into it. Next question. Let's get back to it. That was the economic. I think the government is lying, but the market will have one more all-time high before dropping. I agree. That's kind of the path I'm thinking of. We'll get to XRP. Here's your problem, Oliver, about XRP. XRP, hey, it probably goes higher in this bull market, but central banks don't want to use the XRP ledger. They've already, they don't want to use the XRP. It is a private blockchain. It is a public blockchain. Banks don't want to use a public blockchain. They want to use their own private blockchains. They'll plug into XRP if they want, but they're not going to use XRP. They're not going to adopt XRP for great reason, because why take the risk when it's still sort of centralized? It is the most decentralized. Okay, that's crypto talk. Come on the YouTube for that. Jump on the YouTube. I got something better for you. Best investment I've ever seen of all time. We'll get into that. Appreciate the love on there on TikTok. So yeah, all-time highs before dropping it. I might be bearish after FOMC. Hopefully Powell does something. The hikes. Come on, bro. Stop. You can't be eating McDonald's and misspelling. Come on. You got one chance. Spell it right. Slime Z. You're getting, you know what I'm saying? You're a veteran now. Let's go. Hopefully Powell does something. The hikes. No, I'm just kidding. I make mistakes too. Anyways, yeah, I agree with you. I think the Fed does pause. I think things are going to come in weak. The Fed does pause. I really do. What they'll probably say at this point, they're going to pause and then they're going to say, but we'll still hike later. I don't think they do it, though. I really don't think they do it, bro. All right. We're going to get to the technicals, right? The technicals are looking juicy right now. Tesla, especially Tesla. GDP was revised softer. Yes, it is getting revised softer. I mean, at this point, who do you trust? At this point, just watch the market's price action. I don't even think GDP as a solid number matters. I think what matters is whether things are becoming more constructive or not. In the perfect scenario is that oil comes down, rates come down. Right now, it's a rate story. It's all about rates. We need rates lower. We need rates to come down. That is the story. And as long as that does continue, rates come down without growth collapsing, the market in certain segments will go higher. And here's what I got. Regional banks, they're going to collapse. KRE, keep your eye on KRE. I think that's going to fall. Real estate, XLRE, the XLRE, consumer dependence, right? XRT, which is retail, consumer staples, consumer discretionary to some degree, small caps, blah, blah, blah. They're going to fall apart. And we're going to get to the ones that actually go higher. So yeah, GDP is weak. But to be honest, it's not even about being biased, rather about making decisions 100%. I've been good though. Hope everything's good. I know I'm dead. Yeah, me too. And also I have to finally get a haircut because I'm looking like a broke boy. You know what I mean? I'm struggling over here, so I need to get a haircut. I've been my guys canceled on me, so I got to go early today. I'm gonna leave in about 30 minutes. So throw your questions in there, right? Throw your questions in there. Oh, there goes the market. All right, let's get to the technicals here. Let's jump onto the technicals a little bit. We'll go through the macro forces first, and then and hey, jump over to YouTube if you're not on there to throw your questions in so we don't miss them. See which one's better. We'll stick with this one. I'll move it if I need to. All right. So here's the technicals as of today. All right, here's the technicals. SPY. Let's go to SPX first. Let's start with the big segment. Look, we're still in the uptrend. Okay, we're still in the uptrend, and this isn't even touching correctly, but we're still grinding higher. Oh, it looks like it actually broke. Okay, that's not good. But then all you could do is this little trick, put it on a regular, and then it looks like we're still in the uptrend. Right, put it on a regular. It looks like we're still there. I don't know. It's close. We're at the level. Either way, I think more importantly, more constructively this morning, and you can't see it on this one. You're gonna have to see it on this other, you're gonna have to see it on here. Let's do this. Let's go to this one. Ooh, look at that beautiful Tesla chart moving to 261. And I'm gonna go over that. I did get in Tesla today. I didn't trade it. I'm swing trading Tesla, but this was the buy for me based off technicals. I might sell a little later. Anyways, what I wanted to show was SPY came in this morning, okay, into that 200 moving average. So let me throw that on here. Load. Let's load the macro forces, or I'm sorry, the macro chart. Okay, there's your 200 moving average on Thinkorswim. By the way, they got bought out by Charles Schwab. So I don't even know if I'm going to have these charts anymore. These fools said that they're going to trade the chart. They're going to change the charts. You know how long it took me to get these damn charts? Pisses me off. Anyways, it is what it is. We adapt. We don't complain or play victim. All right. So we came into that 200 at 418 pre-market. This is pre-market, right? We touched it in pre-market. This is super bullish. Usually when you're oversold and you see a pre-market touch and then a boom to the upside, boom, that was the fill. They filled the gap that they wanted to fill. They're moving higher. Is it over yet? No. But in the same, in the same breath, what do we have? As we got down, we touched that 218, I'm sorry, 418 level. Which was right at the 200 daily moving average. So I think S&P has bottomed for now. As long as rates, it's all about rates, have peaked. Let's take a look at rates. Look at short rates. Nope, they're not moving higher. 2-year rates not moving higher. 5-year rates coming down. 10-year rates, they look like they're capitulating. This could keep moving up, but we might peak. Okay, I think Friday is the day. We come in super scary data. Maybe the market does freak out, but I think there's too much rate risk that will come off the table to actually push us higher in the short term. TLT catching a bid. Damn it. When is TLT going to finish catching a bid? This thing has been falling apart like a wet burrito. It's just falling apart. And then the dollar climbing. We need the dollar to stop going up. Damn it. It's at 107 earlier. Hopefully it comes back down. We'll see. But like I said, if something breaks, the Fed will come in and step in. The Fed will liquidate, will inject liquidity. There we go. All right. And then if something breaks in the foreign markets, they're going to want to do a deal with Janet Yellen. Okay, listen, we will buy your bonds. Just please stop hiking the dollar. And then we come back down. We'll see what happens. I don't know. Oil, this was very constructive. Look, this makes me bullish. I've said this all year. Oil, the most important chart in the market, because it's the wildest chart. It is the wildest chart, right? If it does collapse, that does kind of mean recession, but hey, QE, we can come right back in or cut rates, whatever. But what we can't do is if oil keeps surging, it'll increase the recession and cause a lot of prices for inputs for PPI, blah, blah, blah. So this is very constructive. Hopefully it rolls over. We'll see. This is the golden goose at the moment. I don't know if it'll stay there, but that is what we're looking at for the macro reports. Now, look, the other commodities, nat gas, nothing, right? Your electricity bills shouldn't be too high unless you're doing something stupid at night. Copper falling over, right? Wheat rolling over. VIX. Oh, dude, VIX got up, but it came back down. So the VIX is coming back down. Now, here's the scary part. Here's where I'm still concerned, why I might still not be fully into this big move to the upside. I don't think like the bond volatility is spiking. It's higher than it was. It's the highest it's been since May, which was the banking crisis, right? So I think something is breaking. This is the chart that tells me something is breaking behind the scenes, right? Go to equity. If we go to the triple B spreads, credit risk, it is picking up. So something is breaking. We just don't see it yet. I know a couple banks did break. Let's see. And put to call ratio is spiking again. Now it is higher. It's the highest it's been since what? The banking crisis? No, this is higher than it was in the banking crisis. So that's very constructive. We're bouncing here. That sounds nasty, but I think the short selling is over. I think they're starting to cover here. Put to call ratio starting to cover. Now taking a step back, who do we got here? Yeah, super bullish, but I feel like we might touch again, then bounce higher. Let's do this. Let's take a look at, why are we on here? No, we need the candles. Let's take a look here. Here's where my level's at. Actually, we'll go to SPX. My level is here. If we cannot clear this gap that was created at 4,400, then I might short the S&P. Okay, I might even short Tesla. We'll see. Or I might just get out of Tesla, maybe not short it. So I think we do bounce and we get up here. I think we're going to get up here. Let's do that Fibonacci. The Fibonacci is 100% accurate all the time. No, I'm just kidding. It's not 100% accurate, but the Fibonacci says we should get up here somewhere. Fibonacci always lies, never lies. Who knows? It's nothing is the truth, but keep your eye on the Fibonacci. It says we should come up to 4,600. And this is also the downtrend. Okay. This is also the downtrend for SPX, right? It does look ugly, but I think we're going to get stuck here if we do get stuck. I don't know. We'll see. We're data dependent, right? There is no indicator, macroeconomic data. There's nothing that tells you exactly what's going to happen. I am short-term bullish, and I think a 70% chance probability. I think there's a higher probability we do have a Santa Claus rally for at least NASDAQ, for at least tech, SMH, semiconductors not falling apart yet. Retail is. So it's a stock pickers market. This is SPX where I'm thinking if we do reverse, we reverse at this point. Okay, what do we got here? Bukowski, what up? Shout out. Poor stock MOE. He's been holding TMF. Are you talking about Meet Kevin? MOE? Oh, you've been holding that TMF since 750? Where's TMF at? TMF, yeah, TMF, that was the trend bounce. Hopefully dang, that sucks. Yeah, that was a trend bounce and it just rolled over. This is bad. This is bad. It'll capitulate, right? When everybody's so fearful and they're like, okay, you got dudes, what is it? Rip Santoli, somebody on CNBC said, okay, rates are going to 13%. Bruh, come on, man. Here, let me do this. This guy, Rick Santali, this dude's like 75 years old. He's so pissed off that his stocks are falling on him. And he's like, hey, buy bonds. Buy. And then it didn't work. Buy. You know what I'm saying? It didn't work. And so now he's saying, and now he's saying, okay, well, it didn't work. So rates are going, and look at rates. Let me show you where rates are. Rates are here. They're at 4.7%. I don't know what rates he's talking about, but we're at 4.7. And now he's drawing this trend line and saying, okay, well, you know what? If I draw the trend, then rates are going to, 13%. Let's see if we could even go to the maybe the weekly chart. We're gonna get to Tesla. Chill out. There it is. So he thinks we're going to, and it looks like it, right? But this isn't, dude. It's not like rates are a freaking stock instrument with a catalyst. This is a straight squeeze on the buys. This is an opposite of a short squeeze. This is a long squeeze, and then we're gonna get the short squeeze pretty soon here. So he's like, okay, this should take us to 13%, which was when we were at 13%. Bro, you got to be kidding me. You think we're going up here and crush all global, like stupid? No, I don't think so. That dude's tripping. That's not gonna happen. Rick Santali, he, you know what I'm saying? He's pulling that Joe Biden where he's just we're not going to 13%, bro. I think when you get guys talk like that and say we're going to 13%, that's when the move is pretty much over. And I think Friday it ends. Maybe I'm wrong. I just think the probability of it is very high that it does end on Friday. What else do we got here? I don't know who Stockmo is, bro. I don't even know who that is. Stockmo? Don't know who that guy is. You don't know who he is? No, I don't know who he is. Rick Moore like bricks. I don't know who Stockmo. I know Meet Kevin. He bought around 6. Yeah, dude. You know what I was saying? I was like, no, hell no. I'm not buying TLT. Hell no. You know why? Because forget that. TLT doesn't even move. Even if TLT or TMF goes higher, guess what goes higher? Tesla, Amazon, Google, Facebook. Risk assets go higher if yields come down. So I'm like, what's the better bet? Betting that growth falls off a cliff and it hurts stocks? No. Over the short, and Tom Lee talked about this. He's like, look, if you buy bonds, you're still not going to outperform the stock market. Plus, we're not in 2008, 2009. We're not in the same system. If something breaks, the market, the Fed steps in, the US Treasury steps in. We can't afford it. What happened in October? Something broke and they gave dollar swaps out to the world, so they owe us. They're strengthening the dollar. They're strengthening the US economic system. That's what's going to happen. What's going to break? Okay, yeah, let's go over what's going to break here. Look, first, regional banks. Okay, let's go to real estate. Look at real estate. This is the real estate. Oh, my bad. Didn't even see it. This is the real estate ETF, XLRE. Okay, this is breaking to the downside, and I mean, not really the mortgages, but more so commercial. That's going to fall apart. They have to refi a lot sooner, so they're in trouble. Home builders, they look like they're falling off a cliff, but I think something in commercial real estate is breaking. Now, what does that roll into? That actually rolls into commercial real estate. Who are the biggest holders of commercial real estate? Regional banks. KRE. Look at this thing. This thing is still falling. And what I would do is, if you have Robinhood, go to Robinhood, go to KRE, and then look up the top holdings, short those. No, I'm just kidding. I was looking at them. I was like, should I short these? Because inside something's going to break here. It's going to be look at real estate companies and look at the weakest ones, weakest balance sheets. I'm not going to do it because I got other stuff to focus on. But if you want to short something, and I was even thinking about this, it's going to be those. Right, energy is going to be okay. It's not really headed lower. It's whatever. You also might want to short Ethereum. No, I'm just kidding. Don't short Bitcoin. You're going to get crushed. Don't do it. Don't short Chainlink. You're going to get crushed. Right, you're betting against the World Economic Forum. If you can't beat them, join them. And XLU. So look at utilities getting crushed. Also, these things have a lot of debt. So things that have a lot of debt and no cash, not big cash flows, they're getting crushed. They're just dumping. The market is dumping them, and you're getting a rotation. Also, small caps. Why? Because they are not. Small caps have to borrow more frequently than mega caps. Also, they don't have earnings. So, not earnings. They don't turn a profit. I think they don't even have certain ratios because they don't have income. So they're screwed. And you see small caps falling off a cliff. But when we turn to let's not go NASDAQ, let's go to those ETFs. When we turn to financials, they look like trash too. SMH, look at this, still constructive, right? This is semiconductors. Why? Fiscal policy. Now let me turn over to that. Who's going to do well? Fiscal stimulus starts to hit in the fourth quarter. Okay. The Inflation Reduction Act. I say this every freaking time. You guys hear me every single time. The fiscal policy, does that really prop up the economy for a little bit? But I still think we're going to have more of a boom going forward. We're going to have a small slip. Most people think the market crashes. Nobody comes in to save it. I don't agree with that. It's already crashing. Look at the retailers. They're crashing. Target, Budweiser, KRE, regional, they're already crashing. The rolling recession is here. Manufacturing was in a recession. Services starting to fall off. Consumer, anything tied to a strong consumer falling off a cliff, that is your crash. This is not the same stock market as 2008, 2009. It is not the same. There's going to be a boom in other areas, right? Fiscal policy, Inflation Reduction Act, chips, infrastructure, Tesla, AMD, NVIDIA, and this is the semiconductor ETF, right? I think they're going higher. Heavy cash, companies with heavy cash that have a lot of cash, like Apple with $50 billion, $60 billion in cash. What do? They pay 2.5% interest rates, 3% rates, and that's the rates. They locked them in the past. So rates are not hitting them. So what do? They take their cash, put in the money market funds. Money market fund gives them 5%. They pay off they can fund their own debt here. Okay. And the efficiencies, the companies using AI, they are efficient. Oh, you want to see? Oh, yeah, exactly. I am flipping. I'm bearish on certain segments, but I'm still bullish on the market. I was just waiting for this bounce. What did I say all week? We're going to get a bounce. It might not even be over yet. Maybe we go lower, but this oversold, there's going to be a bounce. They're going to cover market psychology. If I'm wrong, it's like there's like a 5% chance that it doesn't bounce at all and we just collapse, right? I doubt that because the Fed will step in and they're going to pump liquidity. All right. Efficiency. So XLC, check this out. That is semiconductors, right? Let's go to XLC. Communication sector. Look at that wedge. Look at that beautiful wedge. Looks like a pizza, right? Look at that pizza. Big old slab of pizza. No, I'm just kidding. Don't eat pizza. It's trash. But it does look like a nice grass-fed steak, cut into pieces. So what is it? Communication services, they benefit from the Inflation Reduction Act. They benefit from the infrastructure bill. They benefit from the CHIPS Act. So I'm not saying go buy a company here. I'm just showing you that there is market breadth. It's consolidating. It's waiting for, investors to step in, and they are stepping in, which is why we see which is why we see Bitcoin going up. And crypto's pretty strong. Crypto's not even responding to the dollar move higher. I'm not hungry yet. I actually had eggs earlier, but will be later. I'm just excited because we got the bounce. Now, you know why I'm excited. I got long Tesla. We're going to go over that. When I'm down, Tesla's getting wrecked. You know what I mean? At least I'll keep it real for you guys. So yeah, I think if something breaks, just like March, the Fed steps in. That's the difference between me, Mag 7 going higher. That's the difference between me and probably every other bear or every other guy, is that I'm just going to trust what the Fed already did. The Fed stepped in previously. Look, we already looked at the damn charts. Okay, let's look at liquidity. Let's take a look at liquidity. What happened here? Okay, this is Chainlink. We're not looking at that. what happened right here. Don't lose me. I'm going to go over to Tesla. Okay, that's the highlight. The Fed stepped in, the market went higher. The Fed is going to step in more than likely. They can do this. And then we still have shadow QE making new highs. Look at this. Look at the shadow QE. We'll turn off the Fed's balance sheet. Shadow QE, money market, money, money coming from the reverse repo is still making new highs, still eating up the short-term treasuries, and it'll probably leak into the market. Here's the thing: banks are being forced to buy the supply of treasuries that the Treasury is putting out. The U.S. Treasury. This is why we had the the whole debt, not the debt ceiling, but the whole the bull crap in politics where basically the Democrats want to spend too much. Everybody wants to spend too much. Don't get it twisted. They all want to spend too much. They just tie it to their own interests, right? You got good and bad, but for the most part, they're selling a bunch of debt, which is pushing rates higher so that they can fund the next spending bill, right? That's what's going on here. And guess what? They're going to keep spending. So what's happening is that the reverse repo liquidity at the Fed is coming in to buy those treasuries. There's too much treasury debt, though. You have $800 billion coming in a month. There's not enough buyers. The retails are not going to be able to buy that. So it's coming from the reverse repo facility, which has $2.5 trillion, which now we're down to $1 trillion. So money is coming in. And I think we're going to have the Santa Claus rally because there's a lot of support. Now, yes, in January, we probably hit a wall because consumers are really going to collapse. And maybe we move sideways. We'll see how it works out. Okay, we'll see how that plays out. But that's my guess right now. Also, keep your eye here on Chainlink. If this thing breaks out of this gigantic wedge, okay, and I hope that XRP guy comes back because I have a lot to say about that. Look at this big consolidation. Once this thing breaks out, look, once it gets above $9, it's really 10. 10's the big breakout, right? That's when everybody goes crazy. Oh my gosh, 10, 1, 0. Right? Those are the numbers they can calculate. They don't know 7 times 7, but everybody knows 10 times 10, right? That's why. Once this thing breaks out, I mean, it's going to head to 20, 15, 16, 20 pretty quickly. Very bullish on that. I know I've already said that. Let's jump over to the other Tesla charts now before I get over to you guys' stuff. If you're sending stuff on TikTok, I can't see what you're saying. Just jump over to the YouTube. I'd appreciate it if you guys do. This is the bounce. Short it. Oh, I already said that. I already went over that. 4,400 is where you want to short. That's your best. That's a gap fill. Then you short over 4,400. I'll even be looking for that if nothing gets constructive here. All right. Because you're always keeping it real all the time. Yeah, 100%. I always keep it real. I don't show everything though. I'm not going to show talk about how much money I have and all that because that's just stupid. Honestly, people can scam you and it's got to be calculated, but I'm not going to reveal everything. It's not, when people say, I say all the truth. Well, you don't give all your truths. I hate that when people use that against you. Tell me this. Well, you're not honest. No, bro. Right. And it's not that I'm not honest. It's that it's none of your damn business. That's what it is. I'll tell you if I think I need to tell you. And also, I'm not going to tell you how to trade. I'm just going to show you the setups, the technicals, right? The way I see it. Is there a semiconductor ETF you like? SMH. I think that's maybe there's a better one, but I'm going to say it's SMH. Now, let's jump over to Tesla here, right? Because the UAW strikes are really setting up to just cause big institutions to further FOMO into Tesla. I think that's the case we're seeing here. Right. I could be wrong. Look, we got 10 minutes left before I need to jet out. So hit me with the questions, comments, concerns, whatever it is. Hit me with it now while I go over Tesla. We'll be back tomorrow. Look, I'm not saying the market is going high for here, blindly buy anything. All I'm saying is it's looking the risk reward is starting to improve. Here's S&P, right? Getting back to that level. I love these charts. I really hope they don't make me remove these charts. Also, market breadth here on the left-hand side. Look at the IWN finally come up a little bit. Get above VWAP. SPY, get above VWAP. Qs, get above VWAP. Dow, get above VWAP. Dow is at risk also. The Dow has a lot of companies who have to borrow more frequently and who are more indebted, and they're screwed. All right, let's go over Tesla. Let's take a step back here. Let's take a step back to the big term chart, okay? Look at this chart. What do you see? What do you see? Man, this thing is marked up. Let me remove this. All right. What do you see? You see the big long-term trend broke. Okay. Oh, you want to put it up here? Cool. It broke. Look at that monster flag pattern. If you know what this, and it capitulated, right? Broke down and then comes back up. Actually, we had that move this morning. We broke down and moved back up. Tesla's price action, beautiful. It does the same thing on the big time frames and the medium and the long-term time frames. Does the same thing. All right. So moving up, we're still in the uptrend. Okay, we are still in the uptrend. And then let's go to the daily. Let's see, are we missing anything here? Let's go to the weekly. Oh no, it's a daily. Let's go to the weekly chart. And what do we see? We're still supporting the 100. We're at we're getting past the 100, but the 200 is still pointing higher on the weekly. Okay, if we look at the quarterly moving averages, if you look at the quarterlies, you always want to look at the quarterlies on the weekly charts. Okay, keep your mind on that. And these are the last quarters of earnings. I do think Tesla runs up in earnings at this point and doesn't do anything at earnings because there's a couple of headwinds. It depends how fast it gets up there. We're above all the quarterly earnings, right? The last 3 quarter of earnings, that moving average is starting to get steep. That's a good sign. Steepness last 2 quarters. Last 3 quarters, I think this one's last 3 quarters, unless I changed it. We're above that one also. That one's not pointing up. Either way, we look solid. Let's go to the daily charts. Okay. I want to switch this to the macro charts. Okay. If you have questions on what the hell I'm looking at, go ahead and ask. Look, we're sliding on the 100 daily moving average. Look at us slide on there. Beautiful price action. We're sliding. I was waiting for this move all freaking the last damn 2 weeks. I'm like, ugh, am I going to short it? And then I took off my short. And then I was like, should I go? And then the market recovered. I'm like, nah, we're going higher. We should bounce at this point. So we're above those moving averages. Now let's scale in a little, look what we had here. Okay, we had the reverse head and shoulders. There's a shoulder, there's your head, there's your shoulder, little mini shoulder broke out, right? Starting to break from this. Now, if you want to look at this on a clean chart, if you want it to be a little cleaner, maybe I'm going too quick, take off the gaps, take off the intraday price action. You want to take that off. And I drew this last night, these lines right here, because I'm like, all right, are we going to break this trend? Once we break it, you get a lot of momentum, right? And we did break that trend. We got all the momentum. So look at, you see that bottoming, right? What did I say? 240. We got below 240. And I said, if we do leak below 240, we need to quickly capitulate back up to the upside. If it doesn't quickly get back up, it's going to be weak under 240, 241. And what do? We slid and then boom, we bounced right back up. That means they covered, they got out and the buyer stepped back in. So Tesla still strong. Now, intraday, how do we trade this? Okay, look at this wedge too. You're getting this wedge pattern start to tighten up and then we gap up and we explode to the upside while the overall market is still moving up. That's why that's when I get long. It doesn't happen all the time, but that's where I get long. Okay, now what were your chances? Tesla leaked super below. Look at, we climbed in pre-market. We got up here. We formed a strong wedge pattern. Okay, even though it didn't like all the way full through, you see the wedge, right? It formed the wedge. We hit VWAP, we broke below VWAP, we got above VWAP. This is the 1 minute. It's not the best chart, honest, or the best time frame, but I just want to show the 1 minute. So we had that big blow off top. You get the wedge, and then you start to break the wedge. Here's where I got in. I think I got in here. Did I get in here? Yeah, I got in here. I got in on this big candle right here. Okay. Do we get volume at the breakout? Yes, we did. Look at, this is the volume, 734 a.m. Well, my time, 734. That was the volume. It broke above the previous level with volume. This is where I got in. Actually, no, I'm lying. I missed that. I saw that. No, I'm lying. I thought that's where I should have got in, but I wasn't paying attention. Okay, so we got the volume. It's because I was looking at the overall market. It was a little sluggish, so I didn't trust it at first. But as soon as it broke out and it started doing this, I was like, oh, it's holding. 1, 2, 3, 4. I got in about right here. 1, 2, 3, 4. I got in here. We moved up and then I got a little, I was like, okay, we're a little, but it held the level, right? This is the level that first showed support. It held that level all the way through, got back on the moving averages, blase, blah, blah, blah. Okay. Now the other patterns, right? This is a typical Tesla upside breakout move that starts another uptrend in my view, right? As long as the overall market can recover, I think that's what we're seeing here. So you get a lot of wedges here. Another wedge. Look at this wedge. Another wedge, flag pattern. When you see these, there's a real buyer stepping in here. Another flag pattern, another flag pattern. You get all these patterns stacking on each other. Dude, let's go. Get all these patterns stacking on each other. And, that's the upside move. Now, I'm looking far out, though. I'm looking till January. I'm looking for a big move to like 278 and then I'll reassess there. We'll see how it turns out. But we could be gapping higher because the S&P is gapping higher. That's all I had to say about Tesla. What else do we got over here? Unless you guys had questions. Also, look at, we're wedging also on the daily time frame. We're also wedging here. So this is a really good setup. I haven't really shown it on here. Let's get rid of this. Here's the wedge that I'm speaking of. Oh no, it's not there. It doesn't start there. It starts up here. Here's the big wedge. This is why I'm excited. When I see a big wedge start to form, right? I know it's a lot of drawing, but when you see that big wedge start to form, then you know, like, we could come back down. That's why if we get up here, I might take some off and just see if there's more weakness in the market. And I want to see it get tighter and then just boom, explode to the upside, maybe before earnings. If it doesn't go up before earnings, then I might hold. But if it explodes into earnings, I'm not sure if I can trust that move. We'll see. It'll be day to day. I'm not going to give no predictions. It doesn't matter what my predictions are. We need rates lower, period. Rates come lower, Tesla's going to explode, period. All right. Made over 80 euros. Congratulations. Shout out to you on Tesla today. When I had classes, was shocked, to be honest. When you had when I had classes, oh, okay. Glasses. No, I'm just playing. So yeah, you made 80 euros. I don't even know what that is in US, but congrats, bro. Always study Tesla's price action. That has some of the best price action in the market. It has the most volume. When it moves, but you got to know, look at on the daily chart, you know what I'm saying? On the daily chart, Tesla breaks down and then moves back up. It does it all the time. Look at this. This was this morning. I just want to show you guys this. You guys that are traders, right? This niche. It actually did form a wedge here. Okay. There was a wedge here and that wedge broke down. It wedged, it started climbing and it broke. Okay. It broke down. See, I know these aren't the best lines, but it broke down from this hold and then it recovered. When it breaks down, Tesla's always the strongest when it breaks down first and then recovers. If it breaks down and doesn't recover, it's done. But it breaks down and recovers. That means the shorts covered. There were too many buyers to come in and pressure them right back up. Usually they just keep squeezing to the upside. That's typically what happens on the big charts and on the short charts. How long do you think S&P could fall to what level? I think we hit the bottom. I think the 200 moving average right now at about 420. I think that's the bottom. What does gapping higher mean? Oh, gapping higher. Gapping higher. This is pre-market. This is after hours, and then this is pre-market, right? The middle is about right here. So this is why I like these charts, because I can see the pre-market, after market hours. So we got to gap down. Check this out. Here's the after hours. Can I remove VWAP? Well, this is VWAP. It's in the way. But this was after hours yesterday, and then this is the next day. You see that gap down? After hours or overnight, Tesla gap down, okay? And then really you're still in the gap. This is really confusing. You're still in the gap. And okay, that was way too confusing. Let's just put it this way. Here's where Tesla ended, okay? Right here, the white line. You see this? This is called PDC. If you've seen my old content, previous day close is the price that the stock closed at. Okay, so it closed at 246. Now, when market opened, it opened here at, let's see, you always start at the beginning of the candle. It opened at 248. So you got a gap up from yesterday to the morning at not even 1%. That's not a big gap, right? It's not a humongous gap, but if you take in consideration that it got all the way down to 243 and then it opened, that's a 1.8% gap. That's a big gap for Tesla. That's billions of dollars, tens of billions of dollars coming into the flows during pre-market. That's more trading commentary though. You're going to be really confused. Just know a gap up is when price moves up in after hours or pre-market and opens up much higher than it did the day before. It doesn't open up at the same price level. Okay, that's a gap up. If we get a black swan, what level do you think we could hit? I don't think we go that far on a black swan because the Fed will step in. So if you're talking SPY, where are we at? 130? Damn, I got to go in a second. See if there's any TikTokers on here. What do we got? So this is the bounce. Short it. We'll see. 4,400 maybe. I wouldn't short yet. I think it's still early to short. Let's go to SPY. If we get a black swan, I think let's throw on the weekly. Okay, let's throw on the weekly. Let's load the macro for the weekly chart. Man, that's going to be ugly. If we do get a black swan, I'd say we come back to probably 40. We probably come back to the 200 weekly moving average, right? So if we get a black swan, it's not going to go straight down to 393. It'll probably trickle down there. Until something happens. But I'm going to say, look, and the weekly looks really constructive. You have the 50-day starting to cross over. We're about to get a golden cross here if we can recover here. This is going to be a big up. Listen, Santa Claus rally is coming. It's coming if this continues, right? There is no absolute, but if we get the macro forces ease, then I think the Santa Claus rally is coming. Clear. No. Just clear this one, bro. All right. So yeah, I would say down to the 200 weekly moving average, bro. If we do get a black swan event, I don't think we make new lows. This is too much. There's a lot of people waiting for the black swan event, and they will buy on a big crash. They're going to buy that fear. They're trained to do so. So by the time, maybe like 400, if you're talking SPY, that's my guess. Yeah, that's my guess, about 400. Let's see, make sure we're not missing anything. I think that's it. I think we went through everything. I got to get going there. Anyways, hey, appreciate you guys jumping on. I'll be on again tomorrow. We'll keep walking through this. What data do we have tomorrow before we go? We have oh, and I forgot to mention the yes, there is weakening in the market. Somebody says something about China. Thoughts on China. My bad, Yari. Thoughts on China. There you go. Yeah, I remembered. Thoughts on China. China's, we don't know if we could trust the data for China, but I will say that if you're talking about how China affects the US, they're just going to keep putting liquidity into the market. If you're talking about how investing in China, I think it's trash. I think you're going to get trash in China. Maybe Baba. Let's see. What does Baba look like? I don't know. But I don't trust China. I don't like China as an investment vehicle at all. I just don't. They have so much that they need to recover from. But their economy isn't totally dead. It's not totally dead yet. So because their ISM PMIs, their manufacturing, if they are true, they're still they're still expanding at a small rate. So China's not done yet. They're not collapsing yet. Maybe they do, if the dollar eases, everybody's going to recover. If the dollar eases, that means rates have to stop going up. So really, this is all about rates. It's the same thing as I said before. It's all about rates coming down, going up. We need rates to come down. But again, who's going to benefit? Technology, industrials, energy, probably. We see that we see that going on with the market. It is starting to not recapitulate, but to reallocate towards, cash heavy companies that benefit from the fiscal policy, right? That aren't dependent solely on consumers. So Amazon, Google, again, like I said, the Magnificent Seven mostly. And I think that's the case. But yeah, I don't have a whole lot of thoughts on China. I'm trying to think if there's anything new. Not really. China's liquidity is going up. That's about it. But dude, they have like so much real estate in China that nobody's living in. They're in trouble, right? They're in trouble. But I think they'll kick the can down the road as usual. All right, guys. Appreciate you guys. Stay blessed. Get your workout. Get your diet in. Learn something new today. Always learn something new. We'll be back again tomorrow to navigate these markets, to see what happens. And yeah, stay blessed. Catch you guys later. Thank you.